Thank you guys so much for tuning into today's live stream. Today is May 7th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So Wednesday, May 7th, we have crude oil inventories, federal funds rates, FOMC statement, FOMC press conference. These three things, or I guess it's just one big thing, but FOMC, that is like probably the biggest news driver this week. It is essentially the federal, the feds, the bank, the central bank releasing the federal interest rates, and that interest rate affects all other interest rates. So we'll see where this takes us, whether we hike the rates or we're going to cut the rates, meaning hike as in raise and cut as in lower. But that is occurring at 1 p.m. Central Time, so that's going to be later in the afternoon. And coming into the morning session, I don't really have a bias. All right, so yesterday, let's see here. So this was the daily candle from yesterday. And with the way that we closed here on this daily candle, like lower prices, it's a down close candle, but I don't really favor the price delivery to the downside or the upside, or especially the upside. There's just no displacement that supports the idea of lower prices. And whenever we opened up here on during the Asian session, so we opened up right here, and look at this. We opened up at 6 o'clock Central Time, and we expanded higher, taking out Tuesday's high of day. After we did that was when I was like, I really confirmed my my bias of not having a bias. And yeah, I like on daily time frame, I can't rely on this time frame. However, the weekly candle is still suggesting higher prices, right? I want to see us take out the previous week's high, but one thing that I do want to mention is that on NQ, we took out this swing leg right here. So this became liquidity. And this swing leg was not supposed to be broken if we're going to maintain bullish, as I stated during the Monday live stream or something. So this swing leg down right here, where this red line is, we traded into a daily fair value gap. We respected it, and then we continue to expand higher. If we take out this swing leg, which we did end up taking, we should have a market structure shift, right? And we should continue lower. But we had SMTs here now. So now this is a different story. Okay, so if ES and NQ, they both took out this daily market structure shift level right here, where the daily market structure shift would be here on NQ. So NQ, we took it. ES, we did it. Because we did not take out this swing leg here on ES, I think my idea or my bias for the weekly high being taken is still, intact, because that's a bullish SMT. But let's just say that ES did take out this swing leg here, then if ES did take out the swing leg and NQ did as well, and there's a lack of SMT, that means I would favor the downside delivery. But yeah, right now, not sure how to approach this, but I know for sure today, coming into the morning, I would rely on, see here, I'm going to rely on the 4-hour time frame and the 8-hour time frame. So those two time frames for a intraday bias, right? So once we close here on this 4-hour candle, we'll either create a bullish candle, a bearish candle, or a candle that I can't really make a judgment based off of. But for right now, with the way that we're closing here on the 4-hour time frame, it's easy for me to assume that the green line, the 4-hour low, is the objective. And yeah, that's pretty much all I have for the morning. Like I said, I'm not using the daily time frame here. The weekly candle, like I said, is bullish, but we're not exactly aligned with that on the daily or intraday time frames. The only time I'm actually going to use the weekly order flows objective in my trade is if the lower time frames relative to the weekly time frame is aligned with that. So none of these daily candles here aligns with us taking out the previous week's high, nor does any of these intraday candles do. So yeah, that's pretty much all I have as of right now. I'll let prices do its thing. We close in about 18 minutes or so. So just watch for that. Give me 1 second, I'll be right back. Yeah, for now I just warm up with a chess game. Wait, is this pawn not just free? Okay, I'm not completely too sure how I want to go at this. I think he's gonna take. Okay. Interesting. I had a feeling he was gonna do that. Oh no, he goes here. I actually can't do anything. I think I can just go check here. I think that might be checkmate. Wow. Yeah, mate. Rough game. Rough. Real rough. Okay. Wait, I go here. Oh wait, oh my gosh, that's crazy. I didn't even. Maybe chess isn't right now, bro. I cannot play right now, bro. Wow, I didn't even see that. Well, we have 10 minutes left, and it looks like we're gonna create a bearish 4-hour candle. So this is that candle right here for the 4-hour time frame. It's relatively bearish, right? It suggests that we're most likely gonna take out the 4-hour low, and one thing that I am recognizing here is that the hourly low is the same low as the 4-hour low and the 8-hour low. So on these 3 time frames, this one and this one, they all have the same low, which means that we should, so going into the lowest time frame here, so if we create a bearish hourly candle, a bearish 4-hour candle, and the bearish 8-hour candle, and their lows are the same lows, you would go into the lowest time frame out of all of them, and this one being the hourly time frame, and kind of visualizing that we should complete the 4-hour objective slash 8-hour objective within the next hourly time frame. That allows you to understand when prices should complete an objective, right? And you could even use that idea, that concept of scope as a time stop. And I'll explain to you guys what a time stop is with the trade that I took yesterday. So the trade that I took yesterday was off stream. It was, let's see what time it was when I took it. It was around like 12:30 Central Time, around there. And so to begin the analysis of this, or I guess the breakdown of this trade, I first want to mention it is that I didn't have a daily bias, nor did I have, you know, an intraday bias coming into this trade. The 4-hour objective has already been taken. The daily objective has already been taken. So what that means is that I have to be a little bit more nimble, and just being a little bit more flexible, and I want to say zoomed in, but understanding that I can utilize other time frames besides just the 4-hour, the daily, right? So during this specific trade here, I took a look at the 30-minute time frame, right? So this is the 30-minute candle here. And with the way that we closed here on this 30-minute candle, you know, it suggests to me that we're most likely going to take out the 30-minute low. And for me, now I'm bearish, right? For the next 30 minutes, I want to see a model, or I just want to see prices in general take out 30-minute low right here. And because I'm bearish for the next 30 minutes, I'm looking on the lower time frames for a bearish model. So going from the 30-minute time frame, I could go into the 15-minute time frame for a model. So like I said, 30-minute time frame, now going on to the 15-minute time frame. So these are 15-minute candles. All of these are 15-minute candles here. And this specific one right here, this down close one, the next 15 minutes, right? In the next 15 minutes, we should take out the 15-minute low and then expand towards the 30-minute low. That's the whole idea of this trade here. So I'm aligning the 15-minute candle with the 30-minute order flow, which is bearish. So within the next 15-minute time, time window, we should open, we should manipulate higher maybe, and then take out the 15-minute low and expand lower towards the 30-minute low. So you guys can see a little bit more insight here. So this is the 5-minute time frame, which I end up using for my entry pattern. So here's a closer look at the 15-minute candle here. So like I said, that 15-minute candle is my model, and it aligns with the 30-minute order flow. And so whenever we open up on this next 15-minute candle, like I said, we should open, manipulate higher into some sort of fair value gap, this one being the 5-minute fair value gap. We open, manipulate, and then we distribute. AMD, accumulation, manipulation, and distribution. So it's kind of like that power of 3. It's like the same concept. There's just a bunch of words for it. Don't know why. But yeah, so whenever we trade up into this 5-minute fair value gap, we should respect this fair value gap to continue lower. And I also recognize that there's this dealing range. So from this swing low to this swing high here, there is a dealing range. And within a dealing range, There's discount, which is denoted by that green shaded box, and there's premium, which is the upper 50% of the box. And in this case, I am bearish, right? I want to see us continue lower, and us trading into the discount of the dealing range is a big factor into why prices and why I have more confidence in lower prices here in this case, right? If you think about it, in a normal regular market, sellers are going to want to always be selling at a premium. They want to sell when prices are high, right? When items in the products and services are considered expensive, they want to make the most returns, right? And buyers, they want to buy things on discount. Like imagine you go into a grocery store, you see 50% off on this, and it's your favorite item. You're most likely going to get that item. Same thing, same concept here. Buyers are going to want to buy in discount, so they want to drive prices lower. This makes sense for them. And yeah, so let's zoom into the 1 minute time frame. So we opened up right here. So that 12:30 open is whenever my trading window starts. So this is when the time stop starts here. So within the next 30 minutes, so from, or not 30 minutes, but 15 minutes. So 12:30, we open up here, and notice how this is the 15-minute low and 30-minute low. So we open up, we leave the 15-minute lows intact. We manipulate into the 5-minute fair value gap, denoted by this silver grayish box here. We trade up into that fair value gap, and then we slowly start to drift lower. After we hit about like 12:45, which is on this candle right here, I move my stops to break even, and this is where we close right here. So like a little bit below the 12:30 open. Once we closed right here, or yeah, on this 15-minute candle, and we still haven't taken out 15-minute low yet, I moved my stops to break even, and then you know, right after that, right after we closed here on this 15-minute candle, we took out the 15-minute model's objective, and then we ended up taking out the 30-minute low here. So you guys can see there, we traded, took it out, and then we barely nipped into the equilibrium here, right? Trade up higher, and then bam, we took out another low, and then just continue to drift lower. And yeah, I mean, it's pretty ideal. You want to be selling above the open. So in terms of power of three, like I stated before, that because I'm anticipating a down close candle, right? For the next 15 minutes, down close candle, generally, this is how they kind of look most of the time. And if you're wanting to be a seller in a down close candle, the best sells are always going to be right here, right? This is the best sales that you can do. When we trade up into this, when we trade up higher above the open right here, that's when you want to be selling. You want to be selling above the open and riding that move down. It's a simple approach, but with rules here, you can turn anything, right? Turn it into anything. And yeah, we have about 30 seconds left until we close here on the 4-hour candle. And look at this, the way that we're closing, you don't know what we're going to do here. So 4-hour candle, 8-hour candle, I can't rely on it. It's too indecisive. Based on the hourly candle, at least, you can kind of make the assumption that we're most likely going to take out the hourly high. So that could be a bias, that could be an objective. And let's see. So zoomed in here on the 15-minute time frame. Yeah, I would anticipate this 15-minute high to be taken. So that red line is my objective coming into this session here. And let's see, did we already trade up into discount or premium? Not yet. So yeah, I actually want to see us, continue higher here. Um, Maybe, take out this red line would be my draw of liquidity. And here I wouldn't have taken anything because this 3-minute fair value gap needs to be treated as a breakaway gap, but it's not. We actually traded into it, but we should respect it. So for us to respect it, we need a bounce off of it and then take out the 15-minute high, which is denoted by that red line. So here's that open, right? Here's that 15-minute open. We're manipulating lower, and we should get that expansion higher here. That's kind of what I want to see. Right, so open, manipulation lower into some sort of lower time frame fair value gap, expand from it, and then take out the 15-minute high right here. And it's that 15-minute high is the same high as the hourly high as well. So we can just wait and see. But that is the approach for today. That is how I would like to see what I would like to see for prices. Let's just watch this with you guys. I just want to see if the thesis was correct. And yeah, I'm not really anticipating too much here. For the morning today, at least. I don't necessarily have a bias. For the intraday time frame, at least, like I said, I would use maybe like the 15-minute or the hourly now, because the way that we close on the 4-hour time frame isn't exactly helpful. But yeah, I think majority of the move today is going to be based off of the FOMC, which I don't think we're gonna really do much during this upcoming FOMC meeting. We might cut rates, but I highly doubt it, because if he cuts rates, he risks inflation, really getting bad. Let's see. Yesterday I did see something about India versus Pakistan, where they're going back into battle against one another. But that is more of like worldwide international events here. Things with the United States, like I said, we are having our FOMC meeting today. The federal rates is going to be released. If we stay neutral, if we stay the same, or if we end up cutting the rates, hiking the rates, it's really up to homeboy Jerome Powell. Wall Street is watching the shipping data to gauge tariff impact. Okay, so like if I were to be in this trade right now, right guys, my the amount of time that I would allow for my objective to be completed before moving stops to break even is 15 minutes, because my model is on the 15-minute time frame. Let's just say my model was on the 4-hour time frame, then I would allow it 4 hours to complete the objective. And that's essentially what a time stop was, or time stop is. Okay, so it looks like ES just took out the 15-minute high. So watching for the SMT there is crucial. So now, because ES has taken out its 15-minute high, I'm moving my stops to break even. So let's just say I took that, move stops to break even, and I just let prices do its thing. If I get stopped out at break even, that's fine. But there is an SMT right now between, so I would have got stopped at break even. There is an SMT between ES and NQ at the moment, right? Let's see. Still really pretty much just continuing to watch. Don't want to force anything, but yeah. Okay, so I think that's good. That's good analysis for today. I mean, it's FOMC. I'm not really anticipating much during the morning session, at least. And yeah, so to begin today's, I guess to end off today, I do want to go over some of the pros and cons. So for me, the main value, this aspect of consistent trades has always been the top value of mine. And yeah, so taking consistent trades, and how do I do that? Requiring a higher time frame objective, a model, and a entry pattern. Those three things. So as I was explaining with you guys, going over this trade here with you guys, higher time frame objective, check. Model, check. There's a fair value gap for entry pattern, check. All three components were met, I take the trade. And understanding my higher time frame objective, right? So for today, like I said, for that trade that I took yesterday, the higher time frame objective was for us to take out the 30-minute low. We had to expand lower towards the 30-minute low after taking out the 15-minute model's objective. And higher time frame objective just allows you to understand and give you a macro perspective on why prices should continue in a specific direction. In fair value gap will always be my entry pattern of choice. It is easy to see. As the way that you interpret the fair value gap is that there are gaps in prices where, there's strength, right? There's so much like movement in a certain direction that is like almost like impulsive. Like it's like an elephant being dropped into a pool, where imagine there's a pool, right? A small, let's just say kid size swimming. Kid-sized swimming pool. And imagine there's a pool like this, right? And an elephant gets dropped into it. Imagine what would happen to this water. It would get displaced. It would be searching for more like volume. And it's not going to be able to contain it can't contain the weight of an elephant. And so water is just going to be just dripping out of this little pool here. That's essentially what's happening with prices whenever there's fair value gaps. There is strength in the market in a specific direction, and it goes hand in hand with the way that I view prices, right? And some things that I can work on, these are more fundamentally, it's not technical analysis, it's more breaking down a company's, step by step, and really evaluating it based off of its future cash flows being brought back into the present value. But yeah, just really understanding a DCF model and structuring one out effectively. And so improvements here, consistent trades, always going to be a top value. How do I take consistent trades? Like I said, higher time frame objective, model, entry pattern. And this week, for me, I need to really review the higher time frame objectives and how to really align your model with the higher time frame order flow. So like the trade I took today, like I said, 30-minute bearish order flow, took a trade based off of the 15-minute bearish power of 3. And yeah, that's gonna be all for today. Thank you guys so much for watching, and until next time, stay safe.